on the marketplace. Businesses seeking to raise new venture capital have had a tough time in 2023. Deal counts and deal values have both declined significantly from 2021 and early 2022 when investors put record-breaking sums of capital to work. Now, this is speaking from a global perspective. Here to help us understand the changing trends and how it affects us locally is Prosper Melome, who is partner investment banking, Bridgewater Advisors Africa. Great to have you in the studio. So let's start, first of all, want to understand what deals are and what deal flow is.
Okay, so basically when we say deals, we are referring to businesses in terms of how they execute growth or preserve capital. In that light, deal counts or deal flows typically refer to corporate transactions. Mm-hmm. And these corporate transactions can vary in terms of whether M&As, capital raises, project finance. This is typically the nature of deal flows. In looking at that, you can look at deal flows from a domestic, cross-border perspective. So when we say international deal flows, that's cross-border.
All right.
Domestic deal flows looks at deals within the economy. Another way to look at deals is also whether from a private standpoint or a public. Public deal flows are deals to do with the stock exchange, whereas private deal flows have to do with deals outside the stock exchange.
Okay. I want us to draw on the relevance because I want our audience to understand why we are talking about this in the first place. How is it relevant to our business landscape here in Ghana?
Right. So, I mean, in terms of relevance, like I said earlier, deal flows has to do with how businesses decide to grow or preserve capital. Mm-hmm. And to a large extent, deal flow is pretty much looking at the movement of capital. And capital is the lifeblood of businesses. All right, so in terms of relevance to businesses in Ghana, businesses are pretty much evaluating deals or deal flow from the perspective of how capital runs through their business, from the standpoint of access to capital, mm-hmm. deployment of capital, what you have, the mechanisms you deploy to preserve capital. So pretty much that is the relevance. And you know, in Ghana, you'd want to talk about most of the deals that occur within the domestic front in Ghana is debt-driven.
Right.
So the relevance is within the debt space, that's commercial lending, what the banks are doing, the policy rates, influencing returns, so on and so forth. So really, that's the relevance we can put to it within our context.
So how has the landscape changed over time? How is that impacting on business in general?
On the global or domestic front?
Well, we could talk about the global and how that translates in the domestic market.
So on the global front, basically, we have to always bear in mind the role of the major economies, the likes of the US, the interactions with China, and the G8, the G20 countries. The power plays pretty much influence how capital moves. And for underdeveloped or developing countries, pretty much suffers a ripple effect. Now, on that level, we've had movements in terms of geopolitical tension over the past couple of years. I mean, we go back to Russia, Ukraine, and what happened. And currently, we are going through the Israel-Gaza situation, and the tension is causing within the Middle East, bringing in the interference of US and all of this. So, all of these factors on the high level tend to influence how business transactions occur. And that aside, we also have the issue of inflation and how a lot of economies have to deal with that. We've also seen a lot of rise in sovereign debt crisis globally. Mm-hmm. Even US has had its fair share. The issues of inflation. These are all factors that are shaping the global front. And like I said, when these factors occur, it sort of trickles down to developing countries. Mm-hmm. Ghana has had its fair share of impact of the Russia-Ukraine situation on the economy. We've also seen how our debt levels shot up because we couldn't keep up to performance in our economy and have to restructure. So really, that is how it comes into play when we look at it from the global level. and then coming down to the domestic.
I want us to talk a bit more about the Ghanaian situation and what it is right now. Right. What factors are driving deal flows in Ghana?
So in terms of Ghana and deal flows, or on any domestic front, the best way to look at it is first and foremost to look at international deal flows and domestic. With regards to international deal flows, the macro setting is definitely crucial. In the macro setting, the macro fundamentals, critical values such as critical variables such as inflation and currency tend to play a critical role in terms of deal flow. So, I mean, FDI is typical big name in, measuring deal flow. Any foreign party with interest in our market would definitely want to know how value can be made or preserved, all right, in terms of increasing value for shareholders. And currently what we are seeing within our market in terms of the volatility in the cedi, the depreciation of the cedi, it makes it quite difficult, okay, for international deal flows to make that commercial sense and be viable for the parties that want to participate. Now, on the domestic front, that's within the economy, we have a really, really high cost of borrowing. The financial system or the banking system tends to play a crucial role in how transactions occur and how deals are done. And so as we are dealing with these high interest rates, it's making business cases more difficult to justify to investors. And so for this particular season we are in, we've seen decline in inflation, and we are hoping that would have some form of impact on considerations for the monetary policy rate, and eventually we hope to see changes within the banking system as far as cost of borrowing is concerned.
Okay, but I want you to talk to us about the risks you perceive this year. You talked about inflation and the fact that you expect that the policy rate declines this year. That's a good thing, right? But what are the perceived risks in 2024 whilst you talk about deal flows? It's an election year. Anything that we should be on the lookout for?
Yeah, so in election years, typically, political risk is perceived to be high. Let's bear in mind the domestic, or let me say sub-regional political tension. We've seen a couple of coups within the sub-region. And so recently we saw elections in Liberia, and we are hoping that by Monday there'll be a smooth transition. We are looking at the case of Ghana. Ghana has had a good history. And so perceived political risk isn't that high for Ghana. But in the context of the sub-region, this is something that is considered high. And also within political years, there always seems to be this, let me say, artificial liquidity, because there's quite a lot of spending, especially when the campaign period for political parties begin. And so some of these spending sometimes may have an impact of even gains we achieve in reducing inflation.
Okay.
There's a possibility it may go up slightly because of some of these activities. But whether we regard Ghana a fertile period within this time for, massive deals to occur and all that, I'll say there are deals that are pipeline deals that are already been in the works, are likely to come to fruition within this year. I think parties would want to, key capital markets and investors, players within the space, would want to observe the economy a little bit more to decide how they intend to going into, whether a possible retention of same government or change in government, because let's bear in mind that the various governments do have various policies as far as the management of the economy is concerned.
Okay.
So you'd want to interpret that implication before you make major moves. So that's how I perceive this economy.
We have 1 minute left. I want you to talk to businesses right now. What advice would you give in terms of how they can position themselves to get those good deals?
Right. So when it comes to executing deals, be it capital raising, be it mergers and acquisitions, the basic line is this: as a business, you need to have a robust business model. Okay, and basically a strong business model is one that can survive the times, that can survive the changing scenes. There's also the need for flexibility in that business model, because obviously, looking at the dollar, you need to have a business model that can withstand those kind of shocks when it comes to changes in the economic setting. But that aside, fundamental, a business needs to have good records, because at the end of the day, to have deals done, it always goes down to the details.
All right. Pastor Melome, partner investment bank in Bridgewater Advisors Africa. Thank you for coming through. Hopefully we'll have you on another time to continue with this conversation. I appreciate it. And that's the marketplace.